Welcome to RFI's Banking Uncovered, the podcast going behind the industry PR, the media spin, the product awards, and the investor reports to look at what's really going on in the customer data, and to ask global thought leaders about their thoughts and views on the future of banking and payments.
Welcome to Banking Uncovered, where this episode I'm delighted to be talking to Clinton Cheng. Clinton is the Global Head of ATM Networks for Visa and previously was Global Head of Ready Fund products, including debit and prepaid. So welcome, Clinton, and thank you very much for joining us on Banking Uncovered.
Well, thank you for having me, Charles. I'm thrilled to be here. Long-time listener, first time, I guess, caller-inner.
Well, looking forward to the chat, and also as I'm dialing in from London, slightly jealous of the beautiful day you have behind you there on the West Coast. But jumping into it, first I really want to talk about the rise of fintechs and its implication for cash and ATMs. We live in interesting times. I think when we spoke just before Christmas, the Fed, the Bank of England, the ECB had all just cut rates. Obviously, Bank of England and ECB are continuing to do so, but the Fed's held back. And there's a lot going on globally, both from a geopolitical view and the implications that has for economies. But one of the things that has remained relatively consistent is this fundamental shift in consumer behavior, where we're finally witnessing, the rise of the fintechs globally. It's been almost 10 years since fintech started, and they really seem to be hitting their strides now. And according to RFI's macro monitor data in the US, where we talked to 5,000 US households, we just literally came out of field a few weeks ago. And in the last 2 years, Chime has had more new primary account openings than Wells Fargo and Bank of America combined. And on top of that, if you combine Chime with SoFi and Synchrony, they now account for almost 1 in 5, 19% of the entire US population for primary banking relationships. Now that has huge implication for access to cash, as digital-only players don't provide that. So what are your views on this as digital players grow and grow and grow and take more and more market share? How do you see that playing out?
Well, I think there's a few things going on. I think the success of Chime and other digital first challenger banks or fintechs is great for the marketplace. I think the innovation they demonstrate creates more competition and ultimately creates more options for the consumer. And so I think, broadly speaking, it's something that will continue to push existing players as well as enable new entrants to really think about the consumer first in terms of a friendly user experience. And I think when you mentioned Chime, I think their success has largely been because they're targeting digitally savvy consumers that like to do things primarily on a mobile device, and a lot of their products are geared towards the mobile environment. I will say, though, I think one of the big misnomers is that these digital savvy, digital only players don't have physical world distribution. I think if we use Chime as the example, it turns out that they recognize that their cardholders do need access to cash, and they go about and provide it in maybe different ways than we're traditionally used to. So they're not building out their own proprietary branch network. They're not building out proprietary ATMs, but what they are doing is they're partnering with third parties, and they're partnering with networks like Visa, which is a very strategic partner with Chime, in ensuring that they have, today 50,000 ATMs that can provide fee-free access to your Chime account, and you can get cash from an ATM. Also, one of the biggest opportunities we see is cash deposits. So for, again, many decades, cash was really about going to an ATM and getting cash out. And we see that more and more, especially as gig workers and new entrants into the economy have are paid in cash, or at least have access to cash, they want to deposit and get against their card. And so Chime is doing this, has a couple solutions where they're providing cash deposits at several thousand retailers in the United States. So through the pharmacies, through C-stores, and you're able to go to the cashier and deposit cash to get it loaded onto your Chime card. Now, I think it's debatable whether or not that's an ideal consumer experience. Again, a lot of the time in these merchants, cashiers are cashiers and they're not tellers. And so one of the things we see is the ability to maybe automate some of that to an ATM channel where, again, you've already got this wonderful technology that dispenses cash and accepts cash. Wouldn't that be the ideal solution for a lot of these digital players? I'd say the third thing I'd say, as part of this is traditional banks, community banks, credit unions are rising to the challenge. They're rethinking their strategy, and they're becoming a lot more digitally first and wanting to appeal to digitally native consumers, and are offering different products and solutions than they have in the past. Again, there is a model where you can do primarily everything on a mobile device, but what you can't do is, get cash and deposit cash. And so I think that allows some of the traditional banks in the US to look at the ongoing journey of branch optimization. So moving what I call basic banking transactions, cash withdrawals, cash deposits, to an ATM, and allows your branch staff to focus on selling additional products, selling services and investment advice and mortgages that they weren't doing fully, 15 or 20 years ago. And I think all of this is creating a fantastic environment where ultimately consumers are the ones to benefit as you have increased competition and really innovative products in the marketplace today.
Yeah, it's really interesting because you've got these kind of very different sort of, it's always, is it push or is it pull? So we know from our latest data that those that are using digital only players, there is a bit of push. So 29% have had a poor digital experience with their traditional community bank or big player. And I think 25% have had a branch closure or difficulty accessing branches. So there's a desire to move to digital. But then at the same time, we know that 50%, 6% of US households considering accessing cash very, very important. And with counterintuitive slightly with Gen Z, that increases to 60%. So it's great to hear what Chime's doing with Visa. But when we look at the kind of wider market, how do you think that it's going to be the traditional players providing better doing branch optimization and providing better digital experiences, or is it going to be the digital players resolving sort of some of the other ways and providing a more let's call it a greater UX, so for when you want to access cash or deposit cash, because as you say, it works right now, but it's probably not like wow, that was an amazing experience.
Yeah, I think it might be a little bit of both, or a lot of both. I think when you look at just access to cash, I went back and looked prior to the pandemic. And so prior to the pandemic, so from 2018 to today, we've seen at Visa cash grow. So we're growing year over year, from 2018 to now, probably about 3 to 5%. I know also that broadly speaking, the industry is sort of flat to declining. So that includes all the teller transactions and then the honor stuff that happens a lot. Now that pales in comparison to card usage and payment volume, which from the same time frame has grown, high single digits, anywhere between 8 to 10% compound annual growth rate from 18 to now. But I think that's driven by one, as you're saying, it's just more digitally savvy consumers and people wanting to use their mobile phones more often. But also the industry has made great strides in terms of acceptance. So again, in your market in the US, transit is something that has historically been a cash-centric purchase, and now you can tap with your card or tap with your device. I think in quick serve restaurants, that has also seen a lot of acceptance in terms of low ticket transaction size. But I think we will continue to see that cash access, both being able to get withdrawals and being able to do deposits, remain relevant. I still look at it at a broader perspective across all generations, but you mentioned sort of Gen Z, and what I think with Gen Z is that they are continuing to look for free and convenient access. So it's not just about having a large number of access points, but it's got to be convenient access points. So again, you look at some of the fintechs partnering with retailers where they happen to know a lot of their customers are shopping, and those verticals, whether it be C-stores or supermarkets or pharmacies, offer that convenient and free access. And I think there's a great argument to be made that those can also become your utility banking access points in terms of both cash deposits and cash withdrawals. The last thing I'd say on this topic is we've seen some data that compares the different generations, boomers, Gen X, millennials, Gen Z. And the one thing that we found remarkable is that if you actually just look at the consumer life cycle, and as an individual goes through the different phases of life, that their financial needs remain remarkably similar despite the difference in terms of the generational cohort. So, you have people that are out of school in their 20s starting their first job. And as you go through your life stages in terms of, buying your first home, having a family, having kids, and then sort of looking into retirement, the demands are the same in terms of what you seek from financial institutions. It's, access to credit, it's everyday banking, to who can provide me my first mortgage, how do I think about saving for my kids' college, and then it's about retirement. And I think ultimately, some of these players that are in the US, as they wanted to maintain their customers and maintain the loyalty of these users over time, they're going to have to evolve and offer more financial services and products. And I think that's where the traditional banks in the US have continued to do a good job in terms of offering the right amount of products and services throughout individuals, life stages, if you will.
Yeah, absolutely. I mean, just want to step away. I want to come back to banking hubs and life stages in a second, but just stepping away from sort of segmenting according to age and everything, and talk about segmenting on a socio-economic basis, because obviously there's significant impact there as well. So we know that households with lower levels of investable assets, so less than 25,000 US, are significantly more likely to prefer paying for a wide range of purchases using cash. Groceries, 29% versus a market average of 20%. Gasoline, about the same. So access to cash becomes much more important to households operating within a spending budget. And we'll come on to it in a bit, but you used to have sort of prepaid cards looking to sort of help resolve that from that issue. What are some of the ways that you're looking to solve that? Because they need access to cash, and they're not necessarily digitally savvy and digitally engaged.
Yeah, I think that's right. I mean, again, if you look at the US landscape, I think it's about 25% of American consumers are still considered unbanked or underbanked. 50 to 60% live paycheck to paycheck, and cash is it's a basic budgeting tool. It's, you'll spend as much as you have, and it's easier to do that for some with cash than with other forms of payment. What I think further accelerates, I guess, some of the pain for these underserved is that there's still a cost of cash. So again, if you look and you try to access an ATM here in the US, what's common is for there to be an ATM access fee or surcharge to access cash at an ATM that is out of network or doesn't belong to you. I think one of the things that we can do as an industry, and we at Visa are working on, is trying to provide more free access. So more surcharge free, so it doesn't cost the consumer $3 or $4 to be able to get cash from their account. Same thing with deposits. Again, as we look at the broader landscape on where there are places that a consumer can add cash to their card, so they can use that card or that fintech or that traditional bank as a budgeting tool and as a budgeting program. There are not nearly enough places, I believe, in terms of offering the ability for a consumer to deposit cash free, and then again, as I've said before, in a very convenient way, meeting consumers where they happen to be shopping every day, or where they are able to access without having to go out of their way, and not having to rely on what are traditional banking hours, and being able to do it, if you're working Monday to Friday during most banking hours. So I think those are the opportunities, and I think those are things how we could probably solve the challenges for a lot of the underserved who are overly dependent on cash. I think the other thing in terms of just expanding that access is just making it easier to find some of these locations. So again, you look at whether it be a traditional bank or a fintech, you usually have to go into a locator or on their website to be able to research where there is a place you can deposit cash or find cash surcharge free. And I think if we were able to make those locations more ubiquitous and more relevant for consumers or Visa consumers, I think that's something that we would consider doing. And I think that would solve some of these issues that we're talking about.
So it's really interesting what you mentioned there about the cost for cash. I don't know if you've seen in Australia, one of the big banks has actually come out saying overtly there is a cost to cash, and we are going to start charging consumers for using cash. And it's turned into a big debate with the Reserve Bank, with politicians, with all sorts of people getting involved. Which kind of leads me on to my next question, because obviously you've got consumer behavior, and you've got the both traditional banks and digital banks creating new experiences that meet consumer behavior, but you also have segments of society where that access to cash and access to a banking hub is an ingrained traditional behavior. And so we're starting to see regulators stepping in. The regulator in the UK has stepped in with these banking hubs, lots of them in post offices, to allow people in small, slightly more rural locations to access all banking services in one hub. The regulator in Ireland is sort of stepping in. So there are some markets where cash remains prevalent. So what are some of the ways that you think that kind of might play out, and what are you seeing sort of globally you think is quite interesting to keep an eye on?
Yeah, I think there's a couple things there. I think there is a cost of providing cash. I think that's undeniable. I think traditionally, it's historically been banks that do it, and it's just part of their operating model and their operating costs. But what we've seen in a market like the US, for example, is that when a financial institution, a bank, wants to optimize their own footprint and their own OpEx, I guess, they may close a branch somewhere, as we talked about earlier. And that will allow another player, maybe a third party, to come in and provide a service for multiple institutions in terms of cash access. Some third parties such as NCR Atleos or Diebold, I think, do it pretty well. And it allows the banks to now focus more on their core businesses of attracting and retaining customers and trying to get primary accounts or get checking accounts. And they worry less about the ongoing expense of maintaining and operating ATMs or branches, for that matter. I think in the markets you mentioned, like the UK and Ireland, I think it's interesting that that regulators feel the need to step in and effectively tell some institutions that they can't close, they can't evolve their business because there's a reasonable expectation that a consumer in some remote locations still need to have access to cash. And what I think we've seen in other parts of the world is that when there's a demand or a need, the market sort of fills that, whether it be a different bank, a fintech, or a third-party player that sees an opportunity where they can provide that service at either a lower cost or at a revenue-generating cost by partnering with more than one or two issuers. I'd ask you how you find the post office experience in the UK. We don't have that here in the US. The post office has never been involved in what I would call basic banking, but it's something that is quite prevalent in the UK. And I'm curious, to hear from you if you think that's an elegant solution for the consumer in terms of trying to access cash or deposit cash.
I'm not sure how elegant a solution it is for the consumer, and how much it's politically driven. I mean, I'm fortunate. I live in a city. I'm not living in the countryside, and certainly in the more rural parts of the countryside. And there have been lots of political issues with the post offices. So as I understand it, it is a solution. It's very similar to, as you said, the work you're doing with Chime, where you go into a retail store and is it an elegant customer experience? Probably not. But would the people doing it much rather have gone to the small high street branch that used to be there that's now closed down? Probably, but it is a solution, and I think it is. I genuinely think it is a temporary solution because I think in 10 to 15 years, there will be very little cash as we move much more into a digital economy, and we haven't even spoken about any of the non-traditional forms of payment, using crypto or anything else. So it's a solution, and it's one that I think appeals to politicians because it appeases people who vote, who can no longer access a branch. And that, as we know in banking regulation, often that's good enough. That's
Yeah.
yeah. That's,
Thank you for saying all that. I agree. I think in some instances there is regulation that seems politically motivated, whereas I think if you step back and actually try to figure out the intent of maintaining, again, cash access for those who had it before, but now it's starting to go away. I would look at it more broadly from a Visa perspective. Again, in the UK as an example, I mean, you can access cash at thousands of merchants if you do cash
yeah,
back
cashback,
at,
yeah.
at point of sale. So it's not like it's, again, going back to like, well, a bank branch closes here in this community, and therefore a post office must be there that can now offer those services. I think about as the evolution of the consumer and how we pay things, and just not even scratching the surface of what you alluded to and all of the emerging ways to pay. It's still there's still a lot of access in terms of those that do need cash, whether it be small amounts or larger amounts to pay for things that they can't pay with a digital credential. So I think that's one of the things that we try to remind regulators in terms of the breadth of the network, in terms of, again, it's just not about branches and ATMs. It could also be merchants that offer cash back, and merchants that are accepting cash for cash deposits, in addition to sort of what I would call unique situations like the post offices in the UK.
Yeah, I think unfortunately branch closures play into a media narrative, and the media likes to amplify that narrative, and that then gets picked up by the politicians and the regulators, and all the good things that come off as a result of that. But I want to come back to prepaid because we mentioned when we were talking about lower socioeconomic households, we mentioned prepaid because prepaid 20 years ago was marketed very much as, you have a prepaid card for this, a prepaid card for this. It's a great way of budgeting. But at the same time, prepaid was also one of the ways that traditionally banks would try and start to acquire customers as they had their first experiences traditionally when you travel and stuff. And it just seems to me that prepaid cards have been fundamentally displaced by the neobanks, by the digital banks, and their incredible customer offerings and customer experiences. So do you think prepaid cards, both in the US and globally, are in decline? Is that something you expect to see to sort of play out over the next 5 to 10 years as these enhanced digital offerings proliferate and sort of replace them?
Well, I think the focus has shifted. I think so. I also look back at just pre-pandemic till now, and from a Visa perspective, our prepaid business has continued to grow year over year. But we've seen a shift in terms of the type of product. So I think what you're referring to 20 years ago was sort of the rise of the general purpose prepaid, which
Yeah.
was a light substitute for a debit account. And I think you're right. I think a lot of that demand has moved to challenger banks, to fintechs, to even more basic debit, basic checking accounts, and more basic sort of debit offerings. Where we've seen, in terms of use cases, a rise in the US as well as around the world is around government disbursements. So again, going back to how things were done 20 years ago, a lot of these programs were um, issuing checks. And so there's been the rise of prepaid growth, both credentials and volume, in the substitution of government disbursements from in check form to now in prepaid form. We've seen that most recently with the stimulus we had here in the US around the COVID
Yeah.
stimulus from the federal government. And so you've seen mass issuing of prepaid cards, and those prepaid cards being used at the ATM for cash access, but also for purchases. I think we've seen that in different countries around the world where, again, it's more efficient and sometimes even more of a consumer-friendly experience to get a prepaid card as opposed to a government check. And I think that will continue to be a really strong business and a demand that where the prepaid solution is a better solution. Again, it's sort of one-time use, and it's not necessarily the general purpose or reloadable like that the fintechs are now offering in terms of trying to maintain a customer through for the years. But I think it's something where there's still a demand for it, and there's still a business case for it in terms of that those prepaid products being the ideal solution. And beyond government disbursements, again, it's like in the healthcare space, some employment cards are still more ideally suited for a prepaid platform than either check or even ACH, especially for those who may not have a bank account.
Yeah, I mean, it's one of the big uses for prepaid, as I said, was a way of capturing consumers when they first started to have their own financial sort of needs and relationships, and which was traditionally when as teenagers when they went to travel, perhaps without their parents or family or without their school for the first time. So prepaid cards were obviously big for travel, and travel, as we know, got severely impacted by the pandemic. But in 2023, spending abroad finally sort of surpassed pre-pandemic levels, certainly for UK consumers. And during that time, we've seen quite a bit of a shift because from sort of 2019 to 2024, so just before the pandemic to kind of like just by the time the tail end implications had wound their way through, usage of debit cards abroad increased really significantly, from sort of 33% to over 50%, so a huge jump. And at the same time, credit card usage declined, relatively similar from just under 50% to down to just below 40%. Now, part of that is obviously travel, but e-commerce plays a significant part in that. So what do you see as the future of debit with those particular trends impacting and driving its increased usage? And do you think that trend's going to continue?
It's a good question. I don't know if it's reflective of the debit product per se versus credit, but more reflective of some of the fintechs that have been extremely successful with their value proposition. I think we've talked about before the players like Revolut, which a lot of their value proposition is geared towards someone who is aspiring to travel or wants to travel and getting or being able to have full transparency into the foreign exchange rates, the FX rates, in terms of thinking about going to international destination in which the currency will fluctuate versus your home currency, and having the ability to sort of buy in advance or try to time the market where you sort of get a favorable rate. I think that might be driving a lot of what we see in the debit category, because it's the credit to the Revoluts of the world, where they're actually offering a strong value proposition that allows you to potentially buy that currency weeks, if not months, in advance of your trip, because again, you wanted to try to get the most foreign currency back for your home currency exchange. I think also just more broadly, like demographically, it seems like post-pandemic, maybe who's traveling, it has been changing over time as well. We've seen some, we're a big cross-border player, and we look a lot at consumer travel. The rise of the single family household. So I think we have some projections that by 2030, a quarter of all international travelers will be the single family household. Wow. And that's people that, again, in our research, are basing their next international trip on favorable FX rates. So where they can get the most value. I think if you look at inbound into Japan over the last 12, 18, 24 months, I think Japan has been a great example of their yen has not been very strong versus a couple of the other major currencies. And you've seen an influx of inbound Americans, inbound Brits going into Japan because
Okay.
those consumers, some of them being single person households, are now seeing value in traveling to Japan. And so that sort of moves on to the top of their list. And with services and products like Revolut, you can also start to buy your Japanese yen in advance before you get there, because they have these wallets that allow you to sort of save and store foreign currency unlike ever before. And I think it's those combination of things where people are researching where they want to go based on the value they get with the strength of their own home currency, as well as these products and solutions that offer more transparency. And I think that is creating both growth within the cross-border travel segment, but also maybe in your example of sort of outbound UK, over-indexing towards some of these digital wallets that have these great user experiences and value propositions.
Yeah, I mean that's really interesting because one of the big changes that we've seen is particularly when it comes to traveling abroad is previously that people used to get cash before they made their trip. I think it was 75, 76%, and that's now dropped to literally just 50%. And the big driver of that are millennials and Gen Z. And millennials and Gen Z fundamentally would rather use a digital only bank. I think 82% of millennials as opposed to 51% for the normal market. They'd rather use a digital only bank, and certainly in the UK they'd overwhelmingly they're going to choose Revolut or Monzo, which kind of leads me on to yeah, probably leaving the big question towards the end. But traditionally, what would happen is that banks would target consumers as they had their first independent financial experiences, often travel, often getting their first job, and getting a great kind of like current slash saving transaction slash or checking slash savings account. Monzo and Starling and the other neobanks in other markets have done a really, really fantastic job at acquiring those young consumers who are traveling, or creating a really great checking account or saving account for when they get their first job. Now, as they start to scale, and I think Monzo's got 10 million customers, and I mean every Revolut's numbers go through the roof every day. It feels like there's a new amazing number they've hit. But are we starting to actually see? I think the top 10 neobanks in the world now have more retail customers than the top 20 retail banks in the world. Are we starting to see what's been evangelized, if you like, by the fintechs for 10 years, that traditional banks are really in danger of having their lunch eaten, so to speak, by these neobanks, because they're doing such a great job of acquiring the customer of tomorrow? And how do you think that's going to play out? And how can traditional banks react?
Yeah, it's a great question. So acquiring the customers of tomorrow, I think is part of it. I think retaining the customers of today,
Yeah.
which may also be your younger people of yesterday, are, I think, largely tied to the products and services you offer through an individual's life stages, going back to what we talked about earlier in terms of life stages. I think not only sort of travel, but the one thing I'd add is, at least I've got a 13-year-old son, and he now has his own investment account. When I was 13, I never thought about having my own investment account, and looking at both stocks as well as potential portions of crypto. And all of that stuff is a lot more readily available and accessible through both new players and traditional players, and really, again, through your phone or through your PC or your laptop, which, again, going back to my first stock purchase 20-ish years ago, was a telephone. You had to do everything over a telephone. You had to call someone, and then you get your broker. And I think times have changed so much. But in terms of what was 20 years ago the financial supermarket, and a bank offering you everything from entry level checking accounts to debit to credit, everything on that journey, I think that as some of these new players are growing their business and trying to continue to satisfy their customers, they will look at products and services that are in demand for where you are in your stage of life. Again, whether it be investments, whether it be your first mortgage, whether it be student loans, or how to save for your kids' college. I think that all comes up as you go through life. And most consumers will obviously shop around and look. And whether or not that triggers how you think about as your primary financial institution remains to be seen, because I think we've seen research, much like you have research, in terms of what is the driver of making a financial institution your primary bank account. I think one thing we've seen is, again, it's like, where does your paycheck go? That is tends to be where you think of as your primary account. And I don't know the success that a lot of these fintechs and challenger banks have had in terms of that, capturing that portion of it, capturing where your paycheck goes. But it'll be an interesting journey. I think a lot of it will continue to evolve. And, from, again, where we started in terms of cash access and physical world infrastructure, are you providing enough? Like, again, I think 20 years ago, it was the largest banks with the most broad footprint, both physical and sort of concentrated in the right areas, is who ended up winning a lot of the checking accounts and the banking relationships. And now you're able to do banking anywhere, and your bank can be headquartered in a different city than you are, and it doesn't matter. It's less relevant. And I think as we think about the right level of access, it's, are you providing enough for me? And I think that's where third-party players and Visa can play a role in terms of offering some of those solutions. But at the end of the day, that issuer, that financial institution, that digital player still needs to be able to offer a compelling reason for those consumers to stay with them throughout their stages of life.
Absolutely. Whether you're a digital player or you're a traditional bank, I think it all comes down to, do you understand what your individual consumers want, and can you provide a compelling proposition? And then it really doesn't matter which one of those you are. That's who a consumer will happily go with. Clinton, it's been fantastic talking to you. We could carry on solving the banking problems of the world and discussing the future for much longer, but we're out of time. Thank you very much for your time. Thank you for joining us on RFI's Banking Uncovered, and sharing your thoughts about cash and debit and prepaid and neobanks and everything that's going on in the world. It was a great chat, and thanks very much for your time.
Yeah, thank you very much for having me, Charles. It was a great experience.